Are we still following the Bitcoin 4-year cycle? That is the question that we are going to be asking and hopefully answering in today's video. To start the video off, we are going to be taking a look at what the Bitcoin 4-year cycle theory actually is. And then we are going to be looking at it to current date to see if we are still following this theory. And then we're going to extend on that and actually try and predict what's to come. And I'm going to be showing you guys, based on the Fibonacci retracement tool, something very interesting in regards to where we are today that does suggest the Bitcoin 4-year cycle theory may play out once again. Guys, strap yourselves in for what is going to be a jam-packed video. Without further ado, let's dive into it. Now, I started my sort of crypto content journey out by looking at the 4-year cycle theory and looking at this exact chart. This exact chart hasn't really changed much since 2018, 2019, when we started covering the cryptocurrency space. And this is what allowed me, understanding this cycle, allowed me to really capitalize on the sort of market action that we saw in 2020, 2021, despite what took place post March 2020 and all the stimulus that was injected into the economy. The amazing thing is and was that the 4-year cycle theory still played out. So let's perhaps explain what the Bitcoin 4-year cycle theory is. Well, it's kind of a little bit self-explanatory, because the Bitcoin 4-year cycle theory is exactly that. It dictates that Bitcoin moves in a 4-year cycle that is centered around the halvening. And you can see on this kind of traffic light system chart that we have devised just how this plays out. So the first year of the 4-year cycle theory is the entering of the bear market. And we'll go back to 2014. We're going to look at this from a number of different perspectives, also talk about when the next halving is going to occur, and do I think we are going to see a repeat of history. So the first year within the Bitcoin 4-year cycle theory occurs after the bull market, the blow off top, and this is year 1, which is typically the bear market, the bulk of the bear market. And we're using 2014 as an example here. Let's actually extend these. So just to show you a full cycle, we'll also be bringing in the halvenings and how they affect things and using that to predict perhaps what's going to come in the future. But you can see 2014 was the first year, which of course was a bear market, highlighted in this traffic light system in a red color. Then 2015, the second year of the Bitcoin 4-year cycle theory, is typically where the markets bottom out. The third year, which was 2016 in this case, is where you start to make an ascent and the bull market starts. 2017, which of course in this case is the 4th year of the cycle, is where the bulk of the bull market takes place. And this occurs post the Bitcoin halvening. So it's not just one reason this cycle theory, the Bitcoin 4-year cycle, actually holds weight is because it does rinse and repeat. You can see it playing out. And even today, when we come to present day, you can see a similar thing taking place. So after a complete 4-year cycle theory, coincidentally, the 4-year cycle plays out again. And you can see the first year is, of course, the bulk of the bear market. The second year is where the market finds its bottom. And the third year, we start an ascent. And then the 4th year is where the blow off top occurs. So the third and the 4th year are typically the times you want to be in the markets. And if we look at where we currently are today, the first year, which of course would have been 2022, we all know the story of 2022, even though there was a lot of macro things taking place, the 4-year cycle still occurred in a traditional manner. And this is where the bulk of the bear market takes place. The second year is where the market found its bottom pretty perfectly. And the third year, which we have just entered, is typically not such a bad year, but there are twists and turns within it. I want to take us over to another chart where I've used the Bitcoin Liquid Coin Index, and the vertical lines down the middle are where the halvening takes place. So you can see typically the bulk of the move takes place post halvening, and we are approaching a halvening very, very soon, coming on an estimated date of the 18th of April this year, 2024, which is roughly 85 days away. We'll call it 86. And ultimately, are we going to see, again, this cycle play out? And let's take a look how things have played out today. We've already looked at the traffic light system to kind of derive where we currently are and if we're following this. And today, it still looks like we are. We're doing a very similar thing to what we did in 2000. and 19 and 2020. And of course, post that, 2015 and 2016 leading into 2017. So if we use the Bitcoin Liquid Coin Index, you can see a similarity in these charts. And what we're actually going to do is show you this via taking the bar pattern of the cycles to show you the similarity of this. And we'll use this cycle here and we'll overlay it on this one here. So it does take place in very much a similar manner. It does look a little bit different. And this is the thing with markets and technical analysis. Really, with technical analysis, you're looking for patterns. Markets typically repeat in a similar manner, not an exact manner. They often rhyme. Perhaps not repeat is the best word to use. But are we going to see a similar thing today that we saw in the previous halving? And I actually think there's a high likelihood that this could actually be on the cards. And the bulk of the bull market is still to come, ladies and gentlemen. So how does the halving affect Bitcoin's price? Well, the largest seller of Bitcoin typically is Bitcoin miners. Every 4 years, and this is what the halving is centered around, the supply of Bitcoin gets cut in half. So in the next halving, the amount of Bitcoin coming onto the market via miners, new Bitcoin coming onto the market, will be cut in half. And there's a supply and demand element that comes into this. We all famously know of Plan B's not so successful stock to flow model, but he kind of, it's kind of a derivative, if you will, of the Bitcoin 4-year cycle theory. So you can see, approaching the halving, you kind of enter a bit of a lull-ish period. Predominantly you still go up, but you kind of consolidate somewhat. And let's drop down the timeframes to actually show you this in a little bit more detail. So we're going to go right down to the weekly, and we're going to go right the way back to the first halving cycle that we have on record, which of course was 2012 as far as we can view it on the charts. And you can see bear market in the first year, bottoming in the second year, up in the third year, and then blow off top in the final year of the markets. So the halving took place here and the bulk of the move took place. But if you look at what we did going into the halving, you can see there's a period of congestion and stallment after the market bottoms. If we look at the second one, of course, you break your downtrend. We did the exact same thing in the next 4-year cycle. Blow off top, enter a deep downtrend, find your bottom, rally up into the halving, go kind of sideways into it before the halving takes place, and then post halving you have the bulk of your move. And this, of course, 2017 teens bull market. Then if we move even further ahead, you can see similar thing. Downtrend, bear market, year 1 into year 2, into year 3, and then of course year 4 takes place. And you can see we kind of go sideways into the halving. I'm going to be bringing up the Fibonacci's in just a second to show you where we currently are, which I think is rather interesting. And it's very interesting to me how we are even time-based following the halving today, despite all the kind of external factors to the crypto space that have taken place. So you can see the current cycle that we are on, obviously following the blow off top in 2021. 2022 is the bear market, into a bottoming market and a kind of upwards market going into the halving, which is second year, into now the third year. And then, of course, we've got the halving to take place in around about 58 days, roughly the 18th of April, I believe. And then ultimately, if the halving is to take place, we still have this to come, ladies and gentlemen, post halving. So is that likely to happen? Well, the fact that we are following the 4-year cycle theory still today, to me, is exceptionally interesting. And there's a saying out there that you don't bet against the trend. The fact that things are rinsing and repeating, and there's a fundamental reason to expect things to rinse and repeat with the supply and demand shock that is caused by the Bitcoin 4-year cycle theory, kind of gives it a degree of credibility. Also, the fact that we followed this 4-year cycle, rather annoyingly, I must add, despite all the events that have taken place, is truly remarkable, in my opinion. And if we look at where we currently are today and we go back previously and look at what kind of price action we saw going into the halving, I think there's something rather appealing. And I want to go back to this cycle here, and I want to show you something called the Fibonacci retracement tool, and more importantly, the 618 level. So if we look at this going into the halving, and we've hit that 618 level today, which is why I'm showing this, and we look at what took place in this bull market, you can see that when we approach this 618, and I've got the golden ratio of 0.65 here, so ignore that. Focus on the 618. Let's broaden this up. you can see that when we run into this level here, the 618, a pullback occurs. And this was rather a steep pullback to the order of 38%. Now remember, the market was very small and volatile back then. So once you're into this 618 level here, you pull back, and then post-halvening things get rocking and rolling. Let's now move on to the previous bull into the bear and what took place around the 618. Again, if we draw from the top here down to the bottom, remember this is a Fibonacci retracement tool. You can see again, after we had kind of bottomed out of the bear market, we rallied all the way up to the 618, only for a pullback going into the halvening to take place. If we then look at where we currently are today, we're in a similar area. The question is, are we going to have such a brutal pullback? Now, it's my opinion that we don't. We are looking at a daily, we are looking at a head and shoulders pattern that we would like to get filled. And of course, a pullback in line with the similar kind of magnitude that we've seen previously around the 618 wouldn't be overly positive. And you can see again today, just like historically, we've ran into the 618 and we are now selling off, which is very interesting. I have a degree of believability with this 4-year cycle theory, which isn't a guarantee that it's going to play out again based on what we've just seen here with the Fibonacci's and the fact that the 4-year cycle very much seems to be repeating. Now, does that mean it's going to continue to repeat? Well, the truthful answer that I can give you guys is I don't know, but it's very interesting in regards to where we are today around that 618 level and how things have interacted going into a halvening previously and the pullback that it's caused. So we're very much rinse and repeating. 85 days away from the halvening. So what I want to do is now look historically at where we've been 85 days away from the halvening. So if we take off these fibs, although it's very important, and do bear that in mind, we have run into that 618 and we are pulling back like historically has been the case. If we take a look, now we have run into it at different points, but if we take a look at 85 days, the last halvening, we'll go ahead and we'll put the date range on here. You can see halvening, and let's go back a whopping, let's do 90 days to round it up. You can see that we were at a similar point in regards to a pullback. If we go back this one, you can see roughly 90 days post, actually the market did well. So this is not necessarily an indication that we have to sell off going into the halvening, because you didn't perhaps in this case. However, you know, you are seeing a similar thing to what historically has been true. If we do a similar thing today, you can see going into the halvening, you are met with quite a choppy period. So you can see how these halvening cycles are repeating even today, ladies and gentlemen. We've just shown you the Fibonacci retracement tool, which we're going to put back on and leave on. You know, you can see the kind of levels that we get into. We run into that 618 going into the halvening. We're kind of repeating in the exact same manner, which gives me a degree of believability that perhaps this is going to play out again. Now, you know, again, this is quite annoying because it kind of really simplifies investing in Bitcoin. But sometimes simple works. People often like to really overcomplicate things. But if something's not broke, why try and fix it? And ultimately, to project even further, which is where I have a little bit of discrepancies with the halvening, is if we look at how long, and we'll take these fibs off for now, the bull market goes on for post-halvening, that could project when the bull market may end. So if we take the halvening to the top, this one topped out 365 days post-halvening. This one, again, topped out 518 days. And the last one that we were in, last bull market we were in, topped out 549 days. So there is this element of the bull markets getting longer. If we were to project from where we currently are today, and we were to just take the mean of that and add 500 days on, for argument's sake, or 518 days in line with 2016, that takes us all the way to the end of 2025. So this is the element that I'm not so sure about with everything going on in the world with the yield curve and things like this. However, what I can absolutely tell you guys to conclude the video is that we are following, annoyingly, simplistically, the Bitcoin 4-year cycle theory still to date. And it kind of becomes a bit of a self-fulfilling prophecy. You know, we've got this really interesting year ahead of us. And we've seen, despite having interesting economic years, the halvening, the 4-year cycle theory being respected. And there is the degree of believability that you can derive from that in regards to it repeating. And we know that, of course, with ETFs and institutional adoption, there's a good likelihood that we are going to see quite a raging bull market. And the good news, I guess, is that we are at the start of that, really. Even though Bitcoin's done very well, remember, we were accumulating Bitcoin back on January the 5th. If you want to get in on some of those calls, consider becoming a Patreon. You know, it's going to be very interesting to see how things play out. So I cannot tell you if we are going to continue to follow the Bitcoin 4-year cycle theory. On balance of probabilities, it suggests we probably will. However, what I can tell you is that we have been following the Bitcoin 4-year cycle theory to date to a T, and we're even, just like historically, running into that 618 level, having a bit of a pullback, ultimately pre-halving. So some very interesting stuff. Hopefully this was a comprehensive enough video that shared my views on the Bitcoin 4-year cycle theory, introduced it to you guys, and answered a few of the questions that you may have involving it. On that note, I'm going to love and leave you. If you've enjoyed this content, a like is always greatly appreciated. So is a comment, and I look forward to seeing you all in the next one. Thanks for watching, guys. See you in the next.